Hi, folks. Dan Bird here with the midday update for July 2nd, Wednesday. We'll see what the market's doing today. One more day left in the week. We've got a short week with 4th of July, Independence Day coming up on Friday. So let's take a look. And I want to answer some questions. I got quite a few questions. So I want to cover those. So it's probably going to run a little bit longer, but I'll try to get through some of the first parts as quickly as I can. As always, I am not a financial advisor. This is for educational purposes only. Let's take a look first at the 10-minute charts and see what the market is doing today. When I looked at it earlier, it really wasn't doing much of anything, just kind of going sideways, but let's see where we're at right now. Starting to move higher. So you can see right here, way back here was the open on Monday. And right now we're staying above the moving averages and continuing to put in some higher highs and higher lows, which is nice. Technology, which sold off, is now coming back today. Financials is moving down today. Discretionary moving up, communication moving down, and industrials moving down. So on the aggressive side, it's really a mixture. A couple of them are moving up, but the other ones are moving down. So not really giving us a clear picture if there's rotation going on just yet. We'll look here. We're up 14 points so far on the S&P. Right now it is 11:24 a.m., which you can see right over here on the left-hand side. There's the time. So 11:24 a.m. on the East Coast. Healthcare is moving down. Staples is flat. Energy's flat. Utilities moving down. Materials moving up. So it looks to me like rotation is kind of flat overall, but in general, it's moving probably more towards the aggressive side, but not really significantly. Let's take a look at the rotation charts. Growth versus value started moving up. Now it's rolling over a little. Discretionary versus staples is going up. Technology was moving up. Semis moving up. Internet moving up. So that's what I was just saying. The aggressive side looks like that's where a lot of the money is moving today, at least in the beginning of today. We'll see how this ends at the end. Now, remember, as I said, this usually is a bullish period before the 4th. And in many cases, many years it's bullish up until the 15th. It might not make it to the 15th this year because we started the bullish period a little earlier than normal. So we'll see how it goes next week. Normally, the day before the 4th is quieter because a lot of people are taking off early, and the day after the 4th is usually quiet as well because people aren't quite coming back yet. So then we'll see what happens. And usually up until about the 6th, from the 26th to the 6th is usually the worst period of the month in most cases. So it's actually been pretty bullish so far this month, but we'll see how that works out. Let's go take a look at, I do want to show you, well, I'll show you the VIX in a minute because that was one of the questions that came up. So I'll hold off on that for a second. But let's take a look at the dashboard and we'll see here equities pretty much doing nothing. S&P a little bit higher. The VIX is down, which is nice. NASDAQ 100 is up. Bonds, the 10-year is up slightly. 20-year is down, and the dollar is up. Commodities up a little bit. Gold, pretty much flat for the day. Silver is the one that's been moving quite a bit. Somebody asked about silver. We'll look at that again in another way as well. And then crypto, Bitcoin moving up at 108 now. So it's moving off of that 106 key level, and now it's at 108. The sector summary for the day, discretionary and technology, two of the aggressive sectors near the top, along with materials, which is where gold is. And at the bottom, we've got the defensive, utilities, healthcare, financials. Financials is also could be considered an aggressive area. Communication services is also aggressive. So again, a mixture. And the advancers, decliners are pretty much split. Healthcare and materials are the ones getting most of the movement today, and utilities has mostly decliners. Past 2 days, Constellation Brands had reported earnings on the 1st, and it's moving higher. So it looks like they And they actually missed earnings, but still it's moving higher. So they must have had a good report. So Constellation Brands looks pretty good. The industry groups, renewable energy again is near the top. Coal, metals, aluminum, you can see energy, materials. This is staples, discretionary, automobiles, discretionary here. Another materials, steel, discretionary here, and discretionary again. So really a mixture of all of the industry groups. And in our top 10 combined lists, we've got a few over here. This one probably shouldn't even be in there. It's very low volume. I'm not sure how that got in there because the search actually looks for volume. So I'll have to go take a look at that one. AMSC, Superconductor Corp, is getting a nice bid today. Robinhood is moving higher. Ava had a sell-off and now it's coming back. Let's see what else we have. GoGo, NXT, Next Tracker is recovering on the other side. The bottom is Heritage, a insurance company. And then we have, let's see, anything interesting in here, some energy stocks. Lemonade started to move up earlier and now it's heading back down. And Wingstop continues to go down. So those are the negative ones. All right, let's take a look at the daily scan real quick. And I can talk about some of the questions over here too. So this one here is Micron. I talked about this before. It sold off a little bit, but it has a hammer today. So that's right at the 21. So that's usually where a recovery may happen as long as the rest of the market cooperates. Let's now take a look at the scan that I created, the new one, which is the momentum. See what we get here. And this is where I want to talk about silver. So silver's on the momentum scan today. So starting to make a move higher. So SLV still got some work to get back up to the resistance level, but it is definitely in an uptrend. So SLV looks pretty good. What else? Newmont Mining is a gold stock. That one's looking good. Mag Silver, another silver stock, sitting right there. Not doing much today yet, but looks like it's just starting into a squeeze as well. Devon Energy is starting to move higher. Here we go, biotech. Biotech is getting a nice move today. So biotech is the one that might be helping the healthcare sector. And if we go over here for subscribers and we'll look at biotech right here, we can look at the stocks that are in biotech. This shows you the ones just for today that are moving. And the thing about biotech is that there's a lot of biotech stocks that make up the Russell 2000, the IWM, which someone also asked about. So I'll talk about that in a minute. But if biotech is starting to move higher, then that's going to help the small and mid caps as well. So the Russell 2000, this will help that because there are a lot of biotechs in that particular index. Let's go back 1 week and see what we get. I don't recognize many of these names. Some of you might recognize them, but you can see here the change. This one's up 178%. Now it's just $1 stock, so it's pretty low priced. But all the way down, you can see all of these, lots of biotechs. They're all mostly all in the Russell 2000. And those are the ones for the week. If we go back 1 month and see what's been moving, 668% up on this one. So 11 cents. So this is weird. It's last one is 10.56 and it's up $11. So how does that happen? This one was $1.43 last price and it's up $1.27. So that's why it's 540%. So you have to be a little careful about some of these, but you could go through and pick out a few if you wanted to. Let's take a look while we're here. Look at the IWM. This is on a 10-minute chart. You can see that it's making some nice headway today. It's kind of moving sideways right now. It's 11:32 in the afternoon. Time is right up there. As it's moving sideways, we'll see if that decides to break higher or lower before the end of the day. But right now it looks pretty good. Down here, the VIX is cooperating. So the VIX right now is at below 17. And the 10-year is just kind of going sideways, not really doing too much on the 10-year. So that should help as well. If we get a rate cut, then the Russell 2000 may take off as a result of that. If we look at this on the 1-day chart, you can see right there, there's the Russell. It's been moving up for quite a while. It's now above the 200-day moving average. It is also, if you'll notice what I talked about yesterday, where I like to get in is when actually, let's do it this way. When we get a green bar and above the 21-day moving average. So that would have been right here. The close was 189. So let's call it 190. And right now we're up here at 219. So that's about a 30 point move since the beginning of April. And it's just continuing to go up, comes back to the 21, bounces up, back to the 21. If we get a little bit of a sell-off here, it's getting near the top of that Keltner channel that I talked about yesterday. When it gets near there, probably will come back to the 21 again. So if you're waiting to get in, that might be the time to do it. All right, let's also take a look over here on the website, on the market bias page, which is now where these charts are. And the Russell 2000 is on this one as well. And this is where the wedge is. And the question was, if it breaks above the upper part of the wedge, will that be bullish? Yes, absolutely. So normally an upward slanting wedge like this is usually bearish. They usually break to the downside, but in this case, it's not. It's breaking to the upside. If it stays like this, so again, we're right at the middle of the day, but if it stays like this, it's going to be very bullish. And it likely is going to get back up here to the resistance level around 225. So this could be a really good move for the Russell 2000. And if we do get a rate cut or even the hints of a rate cut at the end of July, then the Russell 2000 probably is going to take off. There also will be a lot of stocks in the Russell 2000 that will have double and triple moves. You don't know which ones they are, so you have to kind of pick and choose. And you have to be careful too, because a lot of these lower price stocks, many times when they start to move higher, they will come out with a secondary. So they'll take advantage of the move and they'll issue more stock, which dilutes the stock and sends the price back down again. You never know when that's going to happen with these low price stocks. So that's just a risk that you have to understand and be aware of and accept that risk. All right, so I talked about silver, I talked about the Russell. One person asked me if I could send an email out whenever the MTS changes. And the answer is absolutely. That's a great idea. So here's the market timing strategy. You see it's on the long term, it's up 9.7%. And on the daily one, it's up 12. By the way, it just went long-term bullish on the daily. So everything is green on this system right now. Everything across the board is green. But when there is a change, then this will change from long to cash. And yes, I will send an email out to subscribers whenever there's a change. So you'll at least hopefully get an email about it. If you're not coming here, you'll be able to see it if you just come to this page and look at it once a day. But I'll send an email out too. That's a pretty good idea. All right, let's go back to here. One of the questions was, can you show earnings on the chart? And let me pick a different one. I'll pick Newmont. So a couple of ways you can do this. This is the ACP. So this is on stock charts. If you're a stock charts subscriber, ACP is the advanced charting platform. That's what I use here typically for my scans. And as you can see, it has earnings right there on the chart. So yes, you absolutely can do that. It also shows you up here when the last earnings were, which is 423, and also when the next earnings will be, 724, and in this case, after the close. So not only the date, but it tells you whether it's before the market open or after the market closed. So that's the way you can do it on the ACP, which is free if you have a stock chart subscription. But you can also do it over here on these. You'll notice, let me put in Newmont here as well. So we're looking at the same thing. So in this particular case, it does not put the actual date on the chart, but it will put the date up here. Now, Some people that are old school that have been using stock charts for years and years and refuse to make the change to the new features that are really nice in stock charts, they will not turn on this full quote. They'll leave that off. And if you turn full quote off, they think that you get more real estate on your chart so you can see more, but you really don't. Maybe you do a little bit, but to me, it's really not worth it. So as you can see, you don't see what the earnings are up here. You only see the open, high, and low, and close, and the volume, and the percent change up at the top. So you don't get any of the data that you really want. Just a matter of going down here and clicking on full quote. And once you do that, not only do you get the earnings date, now in this case, it doesn't tell you whether it's after the close or before the open, like you do on ACP, but it does give you the next earnings date and the previous earnings date. It also, though, shows you whether or not there are dividends, shows you what the dividend yield is, 1.69% on Newmont, shows you the market cap, shows you the PE ratio and earnings per share up there, shows you what the technical ranking is, in this case 95.5, which is very high. It tells you whether or not they're optionable right there, shows you the ask and the bid and the last, and the high, low, and close right over here. So this gives you all much of the information that typically you want to have right at your fingertips. And for those that don't use this feature, those that are just bound and determined to stay with the 20th century and turn that full quote off because they think they get more real estate. And then when somebody asks the question, what is the earnings date, or is this optionable, or does this have dividends, any of those kind of questions, they jump out of this chart and they go fumbling around and searching for all of that data. And it takes extra time and they have to go open other sites, whatever. Just does not make any sense to me at all. Let's see how much real estate we really get. So there it is with that turned on. You can see, I can see the whole chart right there. And let me turn it off. Well, it makes the chart a little bit bigger, but not really that much. So for me, I leave full quote on for any stock. If it's an index that doesn't have this kind of information, doesn't have earnings and dividends, things like that, I'll turn it off for those. But just it makes it more sense to me to have the earnings and everything right there at your fingertips. So yes, you can show the earnings. One other thing you can do with earnings on the website at the top up here, it's a little button here, click here for current earnings calendar. You don't even need a subscription for this, so anyone can come to the website and use this. So there's the earnings calendar. You can see upcoming earnings, and we can look at NASDAQ 100, for instance, and you see which ones are coming up. ASML, Netflix is coming up on the 17th of July. Google is on the 22nd. So you can see all of these things right here. Tesla is coming up on the 23rd. It also shows you the estimated revenue, estimated earnings right there on the screen, and whether it's before the open or after the close. So all of that can be right there at your fingertips. You can also look at reported earnings. So ones that have already reported. Again, we can go to NASDAQ 100, and you see Micron right there has already reported. It beat earnings 15%. So it shows you the estimated earnings and the actual earnings. Estimated was 163, the actual was 218. And then estimated earnings per share, 146 versus 168. So this is a way, in Paychecks right here was on the 25th as well. So this is a way that you can look at the past week, you can look at the past month. There's everything for the past month, past 2 days, if we don't have anything. So I like keeping it on past week, but you can get all of that right here on the website just by clicking on that little button right there to get current earnings calendar. All right, let me go back to here. And so we talked about biotech. Energy is moving up today a little bit, and Exxon is as well. Let's go look at, I want to look at this. Somebody asked me to create this RSI above 30, and I want to provide a caution on this. So there's only one on here today, CPRX, and this basically is showing you when the relative strength indicator goes below 30 and then comes back above it. So that is very oversold, and you can see it's very oversold. So anything that looks like this under 30 is going to look like this on the price chart. It's going to be going straight down. The idea is to try to catch something at the bottom that's getting ready to move up. However, you have to be careful because look right over here. The same thing, it would have hit the scan right over here on that white candle. And if you had jumped in on that white candle, then you'd be underwater right now. So just because it's oversold and then moves back up does not mean it's ready to move back up yet. You have to use other components. So look at the momentum. It's starting to move up. Look over here at the color bars. So these are momentum bars as well. Right now they're neutral still. There's no green one. The squeeze chart right here, momentum is still red. It has not turned to light red yet, has not started to move up. So all of these other indicators say that this might not be done yet. This could come back down below 30. It can stay oversold for a very long time, just like it can stay overbought for a very long time. So just be cautious of something like that. What else do we have? Let's see, optionable bullish. Let's see if we've got anything. We've got 12 of them in here. Delta, Deer, IBIT for Bitcoin. Looks like Bitcoin's getting a move today. Altria, Teva, Vertex, and again, biotech's on the chart again. Let's look at large cap stocks, nothing for the bullish side today. IBD bullish, see if there's anything there. Nope, nothing there either. So all of those are showing nothing. This is a new one for Keltner, booking.com. This is looking for stocks that have hit the Keltner channel on the upside and are rolling over. So hitting the extreme level all the way at the top and starting to move down. And there's also one for bearish. So they hit a bearish extreme workday, bearish extreme and starting to move back up. So right here, it went down here into this 3X area and then started to move higher, but looks like it's rolling over again. So again, you need to use everything to make sure that all of your indicators are lined up. All right, that's it for that. The last one that I want to talk about, and this might take a little bit of time. Well, let me look at United Healthcare just for fun. UNH, there we are. UNH right now is at 316. If I look at this on a 10-minute chart, so if you remember yesterday, I said my covered call was at 315 and expires tomorrow, July 3rd. 315 is right there. So if it closes at the end of the day tomorrow be below that level, then I will keep the premium and I will keep the stock. And then I can make a decision to sell another covered call for the next Friday and do it all over again, which I get about roughly about $2 each time. So $2 every week times 200 shares. And it keeps lowering my basis lower and lower. Now, what I said yesterday was if it closes at 324, my break even right now is 324. So no matter where it closes, if I get called away, so anything above 315, the stock will get called away, meaning I will have to sell the stock. But anything above 315 will give me automatically as if I was selling at 324. So if anything above 324, I will miss out on that potential profit. But anything below 324 and above 315, my profit will be as if I sold at 324. If it closes below 315, I keep the stock and I keep the premium and I do it all over again. So that's what we're looking for right now. And right now we're at 316.72. So far today, 316.72. So far today, I would get called away if it closed like this tomorrow, but we'll see. Maybe it'll go down some more. Either way, I don't have to look at it. I don't have to watch it. It's pretty straightforward, pretty risk-free. I'm going to make money no matter what happens, unless it goes to zero, of course. But right now, I actually like to see it close below 315, and I'd keep the stock and I would sell another covered call and lower my basis even more. So that's what that one looks like. Okay, the last one, last question. Actually, there's one other one, which is CMG. Somebody asked me to look at CMG, or actually they said that they are in this one and enjoying the Chipotle food too. So today it's coming back, pulling back today, which many things in the market right now are looking like this, starting to see a little bit of weakness. We'll see how things close out, especially tomorrow. I'm really curious to see how we go into the weekend, into the long weekend, to see if traders are going to position themselves for potentially a fall next week. We'll see. I mentioned yesterday that there was an article that said traders on Wall Street are positioning, are buying, are putting on short positions, and I didn't really see that was happening. But if that is true, and it could imply that the market is ready to drop, but doesn't mean that they are right. If they are wrong, all of those shorts will provide fuel to a new rally that will send things up very, very quickly. So it all depends on whether they are right or wrong. And frankly, nobody knows. So that's where CMG is right now. It actually looks like it's in a nice recovery. You go back further. So there's a nice cup that it's forming. It's got a lot of work to do to get back up here to resistance, which is at 66. But that's a nice cup that's forming, and then may form a handle at the top up there. If we look at the weekly, actually this could come back down again, and you get an inverted head and shoulders. But we shall see. But it really needs to get up here to resistance, which is at about 65. And then on a monthly chart, it looks pretty nice on a monthly chart, actually. So on a monthly chart, it's actually coming down right to where it typically does and starts to bounce back higher again. So overall, it looks it's a strong company and a strong stock. All right, the last question, which might take me a little bit of time, was, and I'm going to try to read what this person sent. It's very interesting. This is from Scott Smith, 8689. He says, trying to create a system for allocating stocks based on market tops or bottoms, following the approach using the VIX to help employ Buffett's classic fear when they're greedy and greed when they're afraid paradigm. So let's take a look at this and see how this works out. So it's using the VIX. So I'm going to use my bottom finder chart. I'll use it for the S&P. So this chart is what's used to identify bottoms. You can see right here the number of stocks. I showed this yesterday, I think. Percentage of stocks above their 20-day, right back here on April 8th, April 7th and 8th, it was 0. There were none. That marks the bottom very clearly. So also in this chart is the VIX down here. So what I'm going to do is let's leave it at 7 months, but I'm going to change these lines up here. Let me turn this off. I'm going to change these lines to the parameters that he is using. So you can see right down here, here's the VIX right here. You can see I have a horizontal line for those that are using stock charts. This is a little stock charts education. So what he says is when the VIX is 10 to 15, wants 25 to 50% allocated to stocks. When it's 15 to 20, 50 to 75%. When it's 20 to 30, 75 to 100% allocated. And when it's above 30, 100% allocated. So let's take a look at that. So I've got it set for 17 and 20, but I'm going to change the first one to 10 to match his and make it pink. And then I put a comma. So for the horizontal line, you can put multiple parameters in here. So the next one he had was 15, 10 to 15. The next one he has was 20, which I already have in here. And the last one that he has is 30, which I'm going to make black. All right, so that's what that looks like. I'll leave everything else in for now. I think we can probably do it this way. So you see the price up here. Here's the S&P up here. So here's the problem that I see with this method. When the VIX gets to 10 to 15, it is very calm. The market is extremely calm, way down here. So you can see this line. Actually, that's 15. That it's not. You can't even see 10. 10 isn't even on here because it doesn't go that low. The VIX has not gone that low, but you can see the 15 level right down here. And what he says is 10 to 15, 25 to 50% allocated to stocks. Well, it only hit it one day right there, one day back here, and one day back here, back through this period. And let's look at the period when it was down here below 15. You see the market, which is kind of going sideways. So you would only be allocated 25 to 50% to stocks at that level. Now, the next level is 15 to 20, which is between this green and red line. So let's look at where we are for that period. 15 to 20 is back here. So that's in through this period all the way to about here. In fact, let me turn this on and we can follow that up. All right, so 15 to 20. So we finally went above 20 right here. And what he says at 20 to 30, 75 to 100% allocated. So let's assume that it's now above 30 and you're going to be 100% allocated to stocks. Well, look what happened. Look at the price up there, the top. Look what happened all through this period when the VIX is above the red line. It's above 30. You're 100% allocated. And then it goes below 30 right here. These two, you might even wait to get a definitive one below 30. All right, so now you're going to be selling your stocks and going down to 50% allocation, back to the 15 to 20% level between that green and red line. So through this whole period, you lost money because the market was going down, and then you're selling after taking that loss. Now you're 50% allocated, and then you're back to 100% again. So right here, right at that point up above, it's above 20. So again, between 20 and 30, 75 to 100% allocated. Let's just say 100%. Now you're 100% allocated, and look at the market. The market continues to sell off, sell off, sell off, sell off. That's a lot of pain you have to go through. Now over here, the VIX is above, let's see, above 30, 100% allocated. So above 30 was starting right here. You're 100% allocated through all this whole period, all the way to right here. When the market is just beginning to recover and start back up. So I went through this whole period selling off, just beginning to recover and go back up. And now you're dropping your allocation back to 75% because now it's gone below 30. All right, so now you're back to 75% as the market starts to go higher. And then right here, drops below 20. So now you're back to 50%. So you're reducing your allocation as the market is continuing to go higher. It goes back above right here. So you're increasing your allocation at the bottom. So that's good. And then it goes back below it again. So you're decreasing your allocation as the market hits all-time highs. So that's the problem with using the VIX in that way. The VIX is to me, it's a point in time. It's not something that you allocate your stocks to based on where the VIX is. I wouldn't necessarily do it that way. What I would do is look at the other components here too. Look at the percentage of stocks above the 20, 50, and 100. And I would be allocating 100% when these get here down below the 10%, below 20%, below 30%, when they get below those lines. So follow this along. So they got below the lines on this day right here. So this day they got right to the line. This day they got below the line. That is the absolute bottom. So I would be allocating 100% when they get there. And look at the VIX. The VIX actually spiked one more time when actually went even higher the next day. But it's one day from the bottom, and you could allocate maybe part of your 50% of your portfolio there and the rest 100% right there. And from that point on, the market just took off and kept on going higher. And then you could allocate 100% based on that, and then just ride it all the way up with 100%. Now, so this is the fear, talking about Warren Buffett. That's the fear component all the way down here. Everyone's selling off to the point where percentage of stocks above their 20 is 0. Down here, it was at about 7%. And at the 200, it was at about 18%, 19%. So everyone was selling right here. That is the fear factor. That's when you should be getting in. But this shows you could use the VIX, but you should use the other things as well. Put call ratio was very elevated. So this when there's lots more puts than calls, this goes up. When it gets up here above this green line, that means everyone is selling. That is fear. So that component, the VIX component, the percentage of stocks above 20, 50, and 200, that is where I would be getting in to the market. I would not be allocating my portfolio based on where the VIX is, because the VIX can stay, it could stay down here below. I mean, I've seen the VIX through periods of market either going sideways or just steadily going up, very slowly and methodically going higher like it did through this period. The VIX can stay right here, down here below 20 through that whole period. In this particular case, you would be only 50% invested at a time when the market just constantly is going higher. So I would be using that Buffett component as points in time, not as a trend following technique. So right here, it looked like this might be, where everybody was bullish, but they continued to be bullish all the way up. The market kept going higher. This is a negative divergence, which means we could, and there still is a negative divergence there, which means we eventually could roll over and start to go down, but you don't know when that's going to happen. So, and you can see the VIX is down here, very calm. It could even get below 15, certainly below 17, but it could stay very calm. The put call ratio now is getting to a point where everyone is bullish. So this is the point where everyone is greedy. So we're starting to get to a point where, and you could even take it right now. You could say right now, even though it could still go a little bit higher, right now is the point where it looks like everyone is greedy. Percentage of stocks above the 20 right here was at 82%. Right now it's at 75%. You can see the percentage over here. Percent above the 50 is at 76%, and percentage above the 200 are at 61%. So these two for sure are in that area where everyone is greedy. Everyone is buying. So that is the point, and you can see very little movement in the market. Very small movements up here. So to me, this shows that the market, I think, is getting tired, getting exhausted, and may need to have a pullback. So that's the way I would use those. I don't think I would use the VIX in that way because it can stay, it won't stay elevated like this very long. If it spikes up above 30, it's not going to stay there too long. In this particular case, it was there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So basically 2 weeks, it stayed above the 30 point. And at that point, you'd be allocating to stocks, but you would have to live through this big downtrend and continue to allocate as it starts to go higher. Anyway, that's my opinion. That was a really interesting question. Thank you so much for posting that. I had never thought of it that way. So I just wanted to take a look at the chart and see what it actually looked like if you actually use that method. So right now, I would say everyone is greedy. That's how I would interpret this right now. Although the VIX is still low, the VIX is not spiking, but the put-call ratio certainly is looking like greed down here. So the VIX is not going to spike until the market starts to move lower. So you're basically already into the sell-off when the VIX spikes up like this. You can see the sell-off actually happened way back here when the VIX first started spiking above 20. And right here, the VIX started to spike above 20, but pull back. It did go down a little bit, but started to go back higher again. So if the VIX spikes above 20, then the downtrend, the sell-off has already begun. I'd rather look at things like the put-call ratio. That kind of gives you some advance warning, and the percentage of stocks above their moving averages gives you some advance warning. All right, that's it. Sorry for a long one today. Lots of really good questions. Thank you. Please continue to post them. I'll try to answer them as much as I can. And I will see how things end the rest of the day, and I'll talk to you tomorrow. Take care.